Hello, my dear friends. As you know, a person is taxed in respect of his own income. But what happens when the taxpayers make an attempt to reduce their tax liability by transferring their assets to their family members like father, mother, brother, sister, wife, etc., such that they can continue to enjoy the benefits? In order to curb these practices, the Income Tax Department introduced the sections 60 to 64, and these provisions are called clubbing of income provisions, which is very important for CA Inter and CA Final. Hello my dear friends, my name is Punarvas Jayakumar and welcome to my YouTube channel Punarvas Jayakumar Classes. Today we will be discussing some interesting aspects in clubbing of income. Before we begin, I request you to please subscribe and hit the bell icon so that you can always be updated about such videos. Let us see some interesting illustrations to understand the concept of clubbing. Let's do it. If a husband transfers his house worth 1 crore to his wife without adequate consideration, let's say for 10,000 rupees, then the income generated from that house, that is the rental income, would be clubbed, that is added to the husband's income. Clubbing would still apply if the asset is given to the daughter-in-law instead of wife. Rental income would be clubbed with the father-in-law's income. If the husband transfers his house to his wife and the wife in turn transfers this house to their daughter-in-law, would clubbing provisions apply? Yes, because section 64 subsection 1 clause 6 covers direct or indirect transfers, and here there was an indirect transfer. However, if the wife buys the home for 1 crore rupees from the husband, there would be no clubbing because this would be adequate consideration. Also, if the husband has given his house as part of divorce proceedings, that is alimony, then there would be no clubbing as well. In order to circumvent these provisions, an individual used to form a trust in which the beneficiary is the individual's wife or his daughter-in-law. The individual then used to transfer a house valued, say 2 crore, to the trust for just 10,000 rupees. Let's say the house earned an income of 10 lakh rupees every year, which has, as per the trust deed, accumulated for around 15 years, and then the amount of 1.5 crores would be paid to the beneficiary, that is the wife or the daughter-in-law. Would this income be clubbed with the individual? The Supreme Court said that the income was accruing to a trust and not to the wife or the daughter-in-law. In order to nullify this Supreme Court judgment, lawmakers brought in 6417 and 6418 to include association of persons as well. For example, trusts. So, now the income of the trust, that is 10 lakh rupees per annum, will be clubbed in the individual's hands from year number 1 itself. Very nice examples, don't you think? Let us see some more interesting examples, my dear friends. A husband gifts his wife some gold. Wife sells this gold and buys shares of a company. Will the dividend income received on the shares be clubbed with the husband's income? Interesting to note that the clubbing shall continue to apply even if the transferee has converted the transferred assets to some other form. So in this case, the dividend income would be clubbed at the hands of the husband. The husband transfers 2 crore worth of debentures to his wife, which fetches a rate of interest of, let's say, 10%. The wife will earn an interest of 20 lakh rupees. She deposits this 20 lakh rupees and creates a fixed deposit on which she gets an interest of, let's say, 1 lakh rupees. Would this 1 lakh be clubbed in the hands of the husband? It is interesting to understand that the income arising out of income earned on transferred assets will not be clubbed. Therefore, this fixed deposit interest of 1 lakh rupees will not be clubbed. Yes, my dear friends, income on income will not be clubbed. Next example. Husband gives his wife 10,000 shares of X Limited. X Limited issues bonus shares of, let's say, 1,000 to the wife. Now the wife sells these 1,000 bonus shares in the open market. Would the capital gain arising out of sale of bonus shares be clubbed at the hands of the husband? The law says income arising from accretions, that is, additions to the assets transferred, will not be clubbed. Next example. The husband gives an interest-free loan of 1 crore to his wife. The wife deposits this amount as a fixed deposit and earns an interest of 10 lakh rupees per annum. Would this 10 lakh rupees be clubbed in the hands of the husband? It is very interesting to know that loan is not considered as a transfer. Clubbing will apply where assets transferred by the individual to spouse, assets must be transferred. Giving a loan is not considered to be transfer of assets. But instead of a loan, if the husband had gifted the same amount, then the income of 10 lakh rupees would obviously be clubbed at the hands of the husband. These were just a very few examples, my dear friends. There is still a lot more to learn in the chapter of clubbing. Please support this initiative by liking, subscribing, but more importantly, commenting below if you want part 2 of clubbing chapter. And also let me know what other concepts you want me to handle. Thank you so much, my dear friends, for all your love. Love you all. Punarvas Jayakumar signing off.